participants. I, I am Maulik Patel. I'm part of Credit Revenue's fixed income platform. Welcome to Credit Revenue Fire Chat series. Today we have a very interesting topic to discuss, the incredible SME growth story. And we have with us Mr. Kamlesh Gandhi, who's the founder, chairman, managing director of Mass Financial Services. Welcome, sir. Thanks for being us. Thank you. Just to give you a background, Mr. Kamlesh Gandhi has been having a 3 decades of experience in this segment. And apart from taking care of mass financial services business, he's also the co-chairman at FIDC, where the industry level issues are being discussed and taken up. Thank you, sir. Thank you for giving us. Thank you. Before we start this topic, I would request you to sir take us through mass services, this journey to date, what all you have seen as changes, and your thoughts on it.
So thank you, Maulik. Today you are taking me back. The avatar is from 1995. But as such, when I was 22 years old then, in 1988, I had this idea. I started by selling consumer durables to various institutes. And by doing that, we could realize that if we can package a financial assistance to the borrowers, who are mainly government servants. I used to go to various government institutes where there are a lot of employees there. I thought that if we can give them some financial assistance. And let me tell you, at that time, EMI or buying things on installments was not at all known. So I was at that time just concentrating on selling more consumer durables by packaging finance with them. And we were the first generation entrepreneurs. Me and my late brother, Mr. Kamlesh Gandhi, were the first generation entrepreneurs with tons of zeal, but practically no money. So what we did that we borrowed 1 lakh from one of Mukesh Bhai's friend and started giving consumer durable to government employees. And we would get direct deduction from the salary for installments. This idea clicked few of the cooperative banks here. At that time, cooperative movement was very active in Gujarat. And that is the journey from 1988 to 1995, where we built up our first 2 crores of capital. And in 1995, when it was mandated that every financial institute should get themselves registered as NBFC, we were among the first few to be registered as NBFC. So, as I told you, it took me back right to 1988. And from 1995, as we talk to you today, on 25th May 2022, we'll be completing our 27th year. And I also talk to myself sometimes to understand that what exactly you have done in this 27 years. As you know, we manage AUM in excess of 6,000 crores. That's not a very big AUM. But you must understand from where we started. We started from 2 crores, currently 6,000 crores AUM. And if you plot it on a CAGR basis, both on AUM and profitability, you will see that we have grown both in excess of 30% over amidst all cycles. So you name any of the headwinds for NBFC, we were there. I don't know whether you know that NBFC registration came into wake once that CRB scam happened. You must not be knowing, or you must have read somewhere. And then the 2001 Gujarat earthquake, and then various financial crises right up to global meltdown, and then 2013 liquidity crisis, and then demon, and we all know that must be very fresh in your memory. So what if you take all these things into account, then also we have grown at around more than 30%, maybe on a lower base. But if you take last decade of our growth, it is also 25%. Our decade of post our first capital raise, we raised our capital in 2006. Our first capital raise was in 2006. And let me tell you, that capital was, in a sense, given to us. We never went for that capital. It was done with a microfinance fund, where they told that whatever you are doing, they were primarily into funding the informal class of the society. And we saw that this is the area where we can really add value. And at those time or in those days, even those customers were not funded by anybody else. I still remember that I had some bank limits, and if I put this in the drawing power, they said that remove this. And contrary to that, if I have this pool now, so it is changed by each and every banker. So that is the change. And in your theme that big from small, contributing big, I'll add that. Big from small, now contributing big, not only from the company's perspective, but from the economy as a whole. When we talk about India's growth story, we talk about MSME growth story. And so the very apt addition will be big from small, contributing big. So this is how we have grown over all these years. While we differentiate ourselves and we take pride in, we have always prioritized quality, profitability, and then growth. Having said that, we have grown at a very decent rate, but we don't believe that as a lending institute we should grow at any cost. There were times, say 2 years back or a year back, we grew our balance sheet by 10%, even being listed. When there was a lot of apprehension among investors that degrowth over how once again will come back on the growth trajectory and all those things. But we were confident that this is temporary. If you have a strong balance sheet size, you'll always get an opportunity to grow. And once again, we're very happy to share that we are back on that trajectory where we envisage our growth anywhere between 20 to 25%. That practically translates into doubling your AUM every 3 to 4 years. And let me share with you, Maureen, there's a very tall order in lending industry. Because as a lender, you have a horizontal presence across sectors and across geographies. Something happens somewhere, you have to be, you are affected and you have to be agile and you lose your slip. So how you manage this lending business is very important from the profitability and the quality perspective, rather than just increasing the AUM. That is what we have learned as a practitioner for more than 30 years. And mass currently is at a very strategic inflection point. But if we continue to do whatever we have been doing and don't do anything extraordinary in terms of taking risks and grow at anywhere between 20 to 25%, within the next 10 years, what looks like around 6,000 crores can easily look like around 50,000 crores. And the point in question, stepping in your shoes, you'll ask me what are the enablers? Yeah. The biggest enabler which I would like to share with you and all of you is that we have a self-propelling capital requirement model. Over all this 25 years, we have raised capital only 3 times. First was Bellwether was that capital was a redeemable preference share, so that were given back. First was from FMO Netherlands, there is a development bank of Netherlands. Then DEG they work under the auspices of KfW, the German Development Bank. And third was IPO. Starting from the last thing in 2017, when we went to IPO, we closed around 3,200 crores. And if we consider that at around double the AUM from 17 to 22, you have to practically remove the 2 COVID years. So you have to give that allowance. We are still at 20% plus capital adequacy. That shows the strength of the company to grow through internal accruals and with the risk of sounding immodest and being predictable. Practically, this 20 to 25% growth requires no capital. Having said that, I am not committing that we will not raise capital anytime. That as a lender, I can't. We might think of further strengthening the capital or might think of doing something new within the sector. But that is where we differentiate ourselves, and this is a very strong enabler. There is a non-dilutive growth. That even today, the promoter group holds more than 73%. And the idea of holding the 73% is not because we don't want to dilute, but we want to grow in such a manner where we add value to all the stakeholders. Right. We, during our time, have seen so many people failing in this sector, and the common denominator for that failure was exponential growth. And the only problem what a lender faces is asset quality. Nowhere in the world you will find that they don't have the markets or they don't have the money to lend. There can be temporary hiccups, but not permanent. But the common denominator is exponential growth that leads to little dilution in the credit qualities, and that creates problem. So a strong internal accrual growth story. I mean, not only mass specific, being in the industry since long, not because we have done that, but I also we work with more than 150 NBFCs in the country. I always tell them that the real taste of your business model is when you are leveraged at the optimum, not maximum, and that optimum level changes post your experience. First, 5 to 6 leverage was optimum, which has now come down to anywhere between 3.5 to 4.5. That changes from time to time. That you are leveraged at the optimum, and you don't have to raise capital every time, and then also you post a decent growth. So this is where we differentiate. The biggest enabler here is that it gives us self-propelling capital, a huge market size. And we talk about MSME, I'll be failing in my duty if I don't attribute this success to the tremendous entrepreneurship qualities of the small and medium entrepreneurs. Let me share with you how we work, since it is not possible for me to go to all 4,500 centers we work at. Now hopefully now COVID is behind us, so we don't mind meeting because we both are sitting without mask. Is a testimony to the same. That I invariably like to meet at least one or two SME entrepreneurs here
in person.
In person, and I'm thankful to all my colleagues of getting that meeting arranged, and we get the ground level understanding of these entrepreneurs. And let me tell you that resilience is multiple times more than what we are. And that is because of the fact that the headwinds they face at the ground level is tremendous, irrespective of their size. So smaller the ones they face it. So a huge market size, which is dominated by a wonderful set of entrepreneurs. You can talk about SME delinquencies, but there is other way around looking at it. That when we talk about even public sector banks having very high delinquencies, the other way around of is looking at that 92, 93 or 90% of the 100 people land, they succeed in paying back. And if you step in their shoes, that's a tall order. Anything which happens in the economy or within their family, they are affected. So I'm not trying to take the side that financial discipline is dispensable. No, financial discipline is indispensable, but we have to take into account where they belong. And amidst COVID, demonetization, if you see the quality of our assets, as I talked to you, we maintain a net stage 3 assets of less than 2%. And that cannot be only attributed to our expertise or credit, but that is also to be, to a major extent, attributed to the people we work with. So a huge market size, which is characterized by a wonderful entrepreneurs working there, a very an extremely excellent track record on our debt management. If you ask any of our lenders, we have been the strongest, as our liabilities has been the strongest asset of my lenders. My liability is an asset somewhere. So they have been the strongest asset on my lender's book. So these are few of the things, along with only one thing I like to add is team mass. We have more than 35, 40 people who are with me since 1995. And that is one of the biggest strength what we have. We are co-promoters, we are co-owners, and at all the levels which it matters, we have tremendous stability. So these are the strong enablers which makes us confident that we are at a very strategic inflection point serving this segment with a vision of not even though we are listed. I will not try to miss out this opportunity to convey that we don't have a quarter or a two view. We anytime when I think that I'm little under pressure or I want to know what is next, I go to my projection and see what I'll be in 2031, 32. And that gives us a lot of strength in taking the right decisions currently. So this is just the introduction. Sorry, I took more time than it allotted to me. But when we talk about the 30 years journey,
yeah. In fact, I have one statement, sir, which I got a lot from the lenders. Maybe HDFC Bank of NBFC. Participants, one thing, please raise your set of questions. We have a Q&A tab. At the end of our discussion, we will take basis the time. So my SME underwriting, sir, in this whole 3 decades journey, would like to hear from you the how it has got evolved, and especially in this era where technology is a very important tool, how that has come in, into the underwriting process, along with what Mars is about.
See, if I share with you as a practitioner, uh, our victim has been extending credit where it is due. Now, as a lender, when you extend credit where it is due, depends upon your assessment of credit. And the assessment in turn depends upon the understanding of the business of the borrower. And as you know, that informal borrowers might be doing very well in the business, but everything is not documented. So we have very serious limitations on judging their real cash flows, their real income, so as not to create borrowers but entrepreneurs. This is what we believe in. We just don't want to create borrowers. We want to create entrepreneurs whereby they borrow money from us, earn, repay, and then they grow and we grow along with them. That is the dictate. So I think it is incumbent on the lenders to see that a borrower doesn't pay. It is not only the borrower's duty. It is the duty of the lender, equal duty of the lender that the borrower does not fail. This is your assessment, because I always share with my credit and risk team that for a borrower it's an event. For me, it's a process. Even though you run SM, you borrow 1 or 2 times a year, or maybe 1 in 2 years, depending upon your requirement. But for us, we lend thousands of customers to thousands of customers daily. So you need to go to the borrower and tell them, and the way we touch the market, and that is what that can be transmission loss at the ground level, which we are always is a task we worked upon, can be worked out. We always convey the borrowers that there are no good or bad borrowers. There are good or bad times. There are good or bad phases in the business. There are the right phase of the business where you should borrow. So the credit assessment depends upon whatever information we can get. So it all starts with a haircut here and a haircut there, and then a conservative thing, and the person really needs to like do. Despite of my earnest efforts, I end up lending them 75,000 rupees. What has changed now? If I jump straight away from what you've been doing to right now, that with so much of data available now, maybe through GST or through the banking and all those things, we can judge the borrower better. That increases our propensity to be more efficient in extending credit where it is due. What do you mean by extending credit where it is due? That means those who deserve should get it honorably and the right amount. But it was a situation where none of us were at fault. It was the complete ecosystem whereby they don't document it, I can't assess it, and in turn I can't fund them what I should. So with advent of lot of technology and with API integration and all, where we can pull the data at will, assess the data at will, and hence can extend the credit what they really deserves.
Which is very
This is the real differentiator. When we talk about technology, and word on fintech, I always tell my fintech friends that fintech, please understand, it is finance and technology. It's not just technology. So fintech should not be reduced just to a transaction exercise.
Yeah.
When you look the other way on credit assessment, it becomes just a transaction. So and I think you don't deserve to earn just on transactions. You will earn where you do the right assessment, then you extend the finance to them, create a value for your borrowers, and then you make money. So we engage with so many of the fintechs, and we see to that they don't dilute credit. And that is once again I tell you that it has been a task to be worked upon basis the understanding. And once again, the understanding comes from your own experience the best.
Yeah.
And the current day fintechs are born and brought up absolutely in a different environment where they're flooded with capital. Let me tell you, my first rating, I went to, I got a below investment grade rating maybe in 96. I went straight away to the MD of a rating agency. I told my complete story, how am I working, this, that. There was tons of enthusiasm, might be little less in content. And he asked me one question, where will you get the capital from? And I had no answer. And he told me, gentlemen, when you have this answer, where you will get the capital from, who is ready to invest in your company, where you will get the debt from, we'll meet again. Now that has changed. People know what how an NBFC plays an important role in the last mile delivery of credit, how NBFCs can really be a catalyst in the economic growth of the country, especially in these spaces like MSME where there is a huge credit gap and they can be funded. So, uh, as for fintech also, I'm talking on the credit assessment. I would urge all my fintech friends to understand that it's a combination of assessment of credit and technology, and not just the technology. And while that is important, turnaround time is important, but it should not be at the cost of credit assessment. And there should not be a cat race on you land in 2 minutes and that guy lands in 1 minute and I land in 25 seconds. That is what I don't understand right now. I don't tell that is wrong, but I don't understand that right now. And so I always tell them that the best thing for an entrepreneur is not only to learn, but unlearn also so many things. So unlearn is provided if we are convinced. So this is on the great assessment. It's come a long way. It's come a long way. Right from getting the recognition of these borrowers who can borrow and pay, extending credit when it is due, covering a lot of journey and a lot of distance in assessing them correctly, and this is progressive. And I'm very happy for that. That the same borrower who under normal circumstances would not have lent more than a lakh, we are happy to lend them 10 lakhs right now. Only because of the fact that we have the credible data with us.
That's where the technology is.
Yeah, very important.
So, sir, just coming to the recent times, COVID has been a challenging time to a lot of entrepreneurs. We all know SMEs have, felt the most heat. What have been our learnings and how do what do you feel they've done to come out?
See, let me share with you the ground level reality post COVID. I analyze it this way that there are these three distinct realities that few of them, I'm starting on a positive note, that few of them have improved what they were pre-COVID because they got more opportunities and then they adapted and they had a lot of opportunity to do more business and so on and so forth. So their business is
the best time for them.
They've improved. Few of them have managed to survive and hang on because their intrinsic business model was good. They were not very highly leveraged. They were really adding value to their customers and all. And I'm sorry to tell, few of them really suffered a lot. They had existential crisis, and few of them could not really survive, but they could not recapitulate post-COVID. That is the fact of life. This is from the borrower's perspective. From a lender's perspective, what happened? That the ones who were very aggressive in lending, presuming that everything is honky dory and it will be honky dory for the rest of the life, they had maximum numbers of those customers who did not survive. It is not so that we had no impact. We definitely had an impact. We still carry additional cold provisioning on the book. But it all depends upon what was your credit philosophy during normal times. And I always feel and I always share with many of my colleagues and friends that under normal circumstances, prudence is known as foolishness. Prudence is regarded as things not required. But this prudence saves you once in your lifetime, and that is enough of the returns you get by exercising prudence throughout your lifetime. Some may be lucky that during that period they don't feel anything, but that's not going to happen in this scenario where we are an interconnected world trying to every country trying to get isolated and once again get back to square one that we just take care of ourselves to a lot of repercussions of whatever happens around the world. So as a lander, the ones who understand the basics, for them survival is relatively easy and they cannot only survive, they can grow. If I talk about mass perspective, Last December, we grew our AUM by close to 13-14%. We grew normally by 20 to 25%, but we have to take into account that the first quarter was a washout. We had a record disbursement last quarter, the excess of 1,700 crores, uh, despite of recovery from COVID. Because during this COVID period, what we did that was to concentrate on strengthening the balance sheet. What we did that normally what would have capital adequacy, we worked in such a manner that it increased by a couple of percentage. And we concentrated on all things, what we should do, what we should not do. And Maulik, let me share with you that after 25 years of experience serving this MSME space, I would like to remain foolish on the ground that I don't know it all. It's an evolving exercise. You know and you learn every day. Once again, you unlearn every day, and then on a given point of time, you are at a particular stage. So you are not guaranteed that unless you are in sync with what is happening with the marketplace. So this is my experience on that.
Uh, Keeping my fingers crossed, COVID is back.
Yeah.
And I hope it does not come back. Do you think promoters, entrepreneurs have that appetite today and are looking at expansion plan? And is Mars also taking that piece, in terms of helping the industry more, in terms of taking the next step?
Let me tell you that the real quality of the entrepreneur is to challenge the status. So they'll challenge the status. If COVID can do this harm to me, what can I do to overcome this? This is the entrepreneurial spirit. Be it COVID or anything. And that is what you call, how you define an entrepreneur. If I was doing a lecture in the college and I told them that entrepreneurship is nothing but challenging the status quo. That is what I have not read anywhere, but that is what I feel day in and day out. That if you have to go with the status quo, I think that it's rooted. So once again, I go by that spirit. They'll challenge this also, and they have not stopped their expansion plan just for that they had faced problems once during 2019 or 20 and they are going to grow. We do machinery funding also. I'm very happy to see a lot of people installing new machines. A lot of people increasing their install capacity. So these entrepreneurs are going to stop because of one-time COVID. And once again, we as a lender are not here just to fund entrepreneurs' aspirations only, but we have to factor in all the factual things also. So while entrepreneur aspiration is 70% or 60%, 30-40% is what are the facts of his finances. So trading off between both these two, we started extending the finances, and we see that the things are getting back to normal, and I think they will try to recoup the lost ground. That's the human mentality. The way people call about revenge eating and revenge traveling and recouping all the things what you lost in these 2 years will not happen unless you recoup on the work front because all these things it follows the work and the money you earn. So I'm very optimistic that people aren't going to be tied up because once there was a COVID and hence we will not go. And on the contrary, they will try to the fact of life is that they let us do what best we can because life is highly unpredictable.
Right. So you've been part of associations, right? We see, uh, this times we've got a lot of government schemes. Your views, how they have helped, and is there anything more you feel is required for this industry?
The first and foremost, what I would like to acknowledge is that now, by sheer virtue of the NBFC's working and the contribution in the last one period of credit, be it NBFC, commercial vehicle, MSME, MFI, whatever it is, there is a set understanding that we play a very important role. I'm telling you because we come from that domain from in earlier years where the existence of NBFC was questioned. कि जब बैंक है तो NBFC की क्या जरूरत? Why do you coexist? We had bankers who tell that when we fund, why we should give you money to fund. So the first thing what has improved over this period, I'm just giving the background and come to various government schemes, which we are very thankful to the government every time. is that there is an apt recognition of a work. And I think this is the biggest reward any entrepreneur can get. It's the recognition of the work. But as you always say, "Deep मांगे मोल." So we always tell the government that yeah, अभी भी और ज़्यादा recognize करो. We want this and we want that. A few of the schemes for the government, like helping with the liquidity at the time, where special instruments were supported and guaranteed by the government, so that gave banks the strength and the courage to fund us, and that kept our liquidity moving. We got moratorium despite after explaining the government about the real need of the moratorium, because we, after all, we don't use money for ourselves, we do it for down the line lending. So if I give moratorium, I need to get moratorium too. So we're getting moratorium, and then recently the loans guaranteed for MFIs. I was talking to a few of the MFIs. They said that we are now having public sector banks in our liability management, and they're participating. That was because of the government scheme. So government has always acknowledged the role played by NBFC, and as I told you that there are a lot of things which we are interacting with government. That if certain things which are the bottlenecks for us to solve the last, as far as the last point like it is concerned, should be better understood for the cause of the borrowers we serve. See, unlike a manufacturing unit, I don't take money and buy machines for my industry. I take money and lend it to somewhere. If I am representing a problem, I am representing the problem of my borrowers. I am not representing my problem. So that is what we are trying very earnestly with all the regulators, that you please understand that India still has more than 50 million or 60 million MSME borrowers who are into informal space. You need people like us and institutions. So for that things to happen, you have to understand the real characteristics of the borrower at the ground level and what the problems we face from time to time. So we interact with the regulators from time to time. We get few, we don't get few, but our efforts at FIDC level always continues.
Uh, Sir, at an NBFC level, there are key things like underwriting. You know, what do you feel Mass has or you guys do, which is beyond this? So what are the additional stuffs which you feel are important and which in a normal world, NBFCs ask only 2 3 questions, but the key things are not beyond that.
So as I told you that the credit assessment techniques is an ever evolving process. As we learn about the clusters, the segments, the same thing has to be imbibed fast. And let me tell you that when an NBFC tells that we have learned from our experience, that means you have lost money there. When any financer tells that I have the experience that we नहीं करना चाहिए, that means we have lost money there. So cumulatively, including us, a lot of NBFC might have lost money at so many places. That has made us more wiser, and when we understand the cost of that money lost, and hence that puts us in that bucket where we are always agile to improve our credit assessment techniques. Cannot be summed up in one or two, but it's a very continuous process that bases the market requirement, bases the performance of the quality of the portfolio. We have a big team of adherence and adaptability in terms of being relative, being close to the market in such a manner that we first put out a great screen which everybody is supposed to adhere to. And then basis the information we get from them, we try to adapt. Because Ahmedabad and Aurangabad are two different markets. What works in Ahmedabad might not work in Aurangabad and vice versa. So this is a continuous process, and every NBFC in their own ways must be doing that, and that ultimately reflects in the quality of the portfolio.
Paucity of time, sir. My last question, and participants, please, shoot your questions. So my last one, segments which you feel have growth potential in the SME world, and why? What's your sense? At least in the midterm. I understand, sir, you are doing.
I think the segment changes from time to time, but currently engineering, fabrication, also in the retail trade across all the spectrum, they are growing at a reasonable pace, and we see an opportunity working with them there. the ceramics and all. So we work for more than 300 segments and subsegments. So every segment has their own, and based on the demography, has their own growth trajectories. But overall, let me tell you that if I sum up the sector as a whole, we see a good traction.
Uh, so we started getting queries. Let me just take one by one. So your views, and I think this one is like your views of the online lenders, the digital age lenders comes from Bangalore. Uh, the best place from where we can get this question from.
So, starting from the last part of the question, India is a market place where no two lenders are competitors. They can always collaborate. So we personally believe that these online lenders, we can collaborate with all of them and contribute in our own way. And secondly, it is very imperative for these online lenders. I quite agree with you that there is a mushroom growth.
Yeah.
And the mushroom growth is because of the very what I can say that is because of the understanding that these markets are going to grow very aggressively. The borrowers are going to increase in loads. The new borrowers, the small time loans or short term loans are going to increase. The borrowers in that class are going to increase. But at the same time, there are phases. There will be mushroom borrowers, and then there will be weeding out process a year or two down the line. So mushroom growth follows by weeding process, and then the Darwin theory, the survival of the fittest, and the survival of the fittest in lending is the ones who concentrate on their quality, not only on the quantity. So, and at the same time, a word of advice to all the borrowers also, and especially the new age borrowers. Maybe I might be out of sync in that age, but not always prudent to take a loan to buy a gift for a girlfriend, and your father not knowing it, and you end up getting nasty calls at your home. You can't complain. So while you people are a very good market for us, but just a friendly advice because I have teenage children. As such, they don't know that, but I'm just telling that it's not always a good idea.
So just before you go, I had one thing. Do you feel only, and this might be true for personal loans, maybe at a smaller ticket, but at SME level, only online lending is something which you find as an idea?
See, I always believe that online lending is a facility of a very high class that an SME gets, right?
Mm-hmm.
That I click and I get the loan. Now you should deserve that. That is my point. Let's say, for example, I give an example that I have access to your GST returns, I have access to your banking, I have access to your credit bureaus, I have access to whatever additional details I get. I pull it out, I put it in my credit assessment, and then I feel that you deserve this credit, then online SME lending is good to that extent. But if it requires a lot of balance sheet analysis for a high ticket size loans, whereby I need to analyze each and every of your data, where I can just go by the average banking balance, where I need to see that how your creditors are behaving. Majority of the SME entrepreneurs having number of sister concerns where I need to know and find out the trail of the transactions. I cannot ignore all those stuff. So so there is a market differentiation up to certain amount, this much information is fine. This is my own learning. Let me share with you more. Okay. Otherwise, for every 20 lakhs rupees of loan, I would ask everything. And I recently had my president retail assets quoting to somebody that if you want to jump from a fifth floor, you don't need a parachute. So if you want to land this one, this is what the papers you should have. That's learning, and that works well for us. So SME online lending works well, provided it is done the way it should be.
So the next one is, my favorite to you. What's your take on hiring and retention of quality? Because I know for the fact that you have one of the key team which is like with you for decades.
So just to be candid, I tell my colleagues that I have done my job, and you people are here to do your job. I have my team. So all of you are my team. I have 35, 40 people who you were with me, you are with me, and I know you are going to be with me. But same is not true with them down the line. Let me be very honest. So the hiring and retention quality manpower, I think we should try to be as honest as possible with the people you work with, and we just try to advocate that you not only earn, you will learn also, and that's very important. Having said that, all these things sometimes looks hollow the way the market requirement is and the market trends are. But I think if you stick to the fundamental, you succeed to the extent you want the hire. So once you are honest in what you project to the talent you want to acquire, if you map it in the right manner, in our hiring, especially, there can be transmission loss down the line. But if you ask me, I give 7 out of 10 marks on attitude and 3 on rest of the things. And, 7 out of 10. Yes, I want people who have the concept of admission with permission, not no admission with no permission, because you work in an UN world which is absolutely imperfect. There's nothing perfect in the world. So a new hire cannot ask for all the perfection in the organization to perform. And that is where they need an attitude whereby they have to understand that they have to be part of the solution and not the part of the problem. I would prefer rather a graduate than a postgraduate, given that trait of an attitude, who is 7 out of 10, and these guys are 5 out of 10, because as that famous saying goes, that talent is as cheap as table salt. What difference is the attitude and the perseverance. So that is what we believe in. And let me be very candid. We are no other company where we don't face problems in getting quality manpower. We do face that problem, but we are constantly working on.
For NFI sector, the next question is on that. Differentiatives of services provided by mass and other companies, specifically in NFI, you've seen this sector since.
So, if I understand the question correctly, that how are we different than MFI? So, the key difference is that we work 2 to 3 strata above the MFI sector work, where they can even have the facility of the cash collection and at times cash disbursement, which is not in wage now. But we work 2 to 3 status of a higher income as compared to MFI, and we are not just confined to women borrowers and GHG. So we give loans to the entrepreneurs who have a revenue size anywhere between 30 lakhs to 30 crores, unlike MFIs, which are very micro entrepreneurs. And to cater to them, we have tied up with few of the MFIs in the sector. So that gives us a virtual presence there.
So recovery. Question is the next one is on that. Strategies used for timely recoveries of loans and anything as a specific recovery method.
Recovery method, there is nothing new. Recovery method is that you should detect the delinquencies early. The follow up should be very strong. And let me be very candid here. Now the borrowers are far more educated to be bullied, so they know the rights. We need to maintain relationships and then recover. We have to understand what went wrong with you, so as you could not pay money. So understanding them and then recovering, and with adequate follow up, and never say die attitude. That is what you require here. And in at mass we don't call our executives that recovered as recovery executives. We call them portfolio managers. Oh. And let me tell you an incident that one of the guys came to me and tell that I'm finding it difficult to find a match. And he told that only because that they said that you are a recovery executive. So the common foundation and understanding is recovery executives are heavy-headed people and they do this and that. And from that day, I said that no, you are the most important. See, in NBFC funding, origination, credit, and collection, that's all 33%. Any of the vertical not working, you are out of the business. So they are one of the most important guys in the organization. So we started calling them portfolio managers. They manage the portfolio. I tell them we are the portfolio doctors. People don't go to a doctor unless they are ill. So we come to you that boss, these are the portfolios. Please do something for us. So don't feel down or don't feel little less while working in a portfolio company. And at that point of time in COVID, to be honest, I lost some touch. But during that point of time, I used to make a point to talk to the lowest in the strata, lowest in the hierarchy portfolio executives, so as to make them feel confident. They are very important guys. This is a very integral part of your recovery management. That how you make your people feel when they go for recovery.
think this also adds to the hiring.
Yeah.
Uh, so, yeah, do you think MSME borrowers are getting funds too easily because of the disbursement targets and the growth which NBFCs are?
Correct. I agree to that. And I would like to, ideally, this question is correct. I concur with that. But ideally, it should be, two should not be there. It should be funds getting easily. Too easily is wrong, practically. But it just started happening with few of the NBFCs in race to create portfolios fast. They started getting too easily. But I hope soon it will be easily and the two will be out of that equation.
But just I go to the next. Have you not these 3 decades ever got into pressure of disbursement?
We are always under pressure of disbursement, but you have to manage that. It's never so that you are not under pressure of disbursement. You need to talk to the origination team that how we have reviews and how we work. Disbursement, we are never out of the pressure of disbursement, but you should know how to manage it. And you should draw a line that beyond what point you should not do it. And what is, I got this very good what I got a very good phrase from one of my investors. There is intelligent risk taking. What do you mean by intelligent risk taking? So you always have to be there. What is intelligent risk taking? What is entrepreneurial risk taking? Which sometimes you do something out of the box, but you cover everything which really matters to you.
The most important.
The most important thing. So disbursement pressure is always there.
So last participants, last 2 questions. How are your tie-ups with NBFCs? How do they work, sir? And small brief of how do you do that?
I will. We have limited time, so I'll do it. I'll take it fast. Otherwise, I can talk half an hour on this. Let me tell you that serving the informal class, we firmly believe that the people closest to the ground are strongest. Now, how do NBFC expand its reach? It can be branches, it can be franchises, it can be DST, and it can be NBFCs. That is what we believe. Because NBFC comes with their skin of the game, with their skin in the game. We work with NBFCs whose median size is around 300 to 500 crores. And for the NBFC sector, a continuous liability is very important. So we work with the NBFC who are into our lines of business, and we on an agri trade streams and regions and terms and conditions, we generate portfolios with them. This is how we work. Cumulatively, this is an 11, 12 years old model. And let me tell you, you'll be surprised, we started just soon after Andhra Pradesh. That how NBFCs can be useful. When everybody was running away from NBFCs. But we ourselves being NBFC, we knew that what's the importance of NBFC. It is a 12 years old model now, and cumulatively must have disbursed more than 15, 16,000 crores. And I'm thankful for all the NBFC partners we work with. The delinquencies has been less than 1%. And in the same segment, had I worked directly, it would have been much higher. That is the testimony of the fact that there has been a quality intermediates. I would like to answer this question, even though if you before that that math has been in existence and your AUM has grown slowly.
Yes.
So first of all, let me explain the philosophy at mass. We don't compete with any of the companies; we compete with ourselves. And let me tell you that what do you consider as high growth? Mass has registered a growth of 30 to 35% plus. You can't take out the fact that we started with 2 crores. Had I started with 200 crores, it would have been 20,000 crores. So you have to understand the company from that perspective. So the journey of mass and the growth of mass has been by choice. That is our choice. And you can ask all the stakeholders with whom we have worked, you added tremendous value. We work with only as I told you that we have only 2 capital raise and 1 was IPO. That each capital FMO remain invested for more than 10 years, and we have to persuade them during IPO to offer for sale to create a critical mass on IP. So let me share my views with the gentleman that NBFC and lending is not only about higher growth and higher numbers, it's about adding value. And that as group mass we feel highly satisfied that what we have done a quality growth, and I would humbly disagree that it has been slow.
So the last one, when you enter new states, what's the general process and how do you do
The first thing is that when we enter a new state, we are not very aggressive. We try to build up a team. We understand the demography. We understand what are the opportunities. We give sufficient time. We don't penetrate very deep when we start. So these are the few thumb rules, principles what we follow. And then once we have the team in place, once we understand the demography, we start penetrating and doing.
Participants, I had a query on mass numbers. Frankly, time has been short, and mass being a listed entity, they have governance levels of providing all that on their website. Do reach out there, raise queries. We are here to answer you on specific queries on data relating to mass. Before I say thanks and goodbye to Kamlesh sir, my thoughts. We all know how important SME as a sector is, and clearly we see entities like Mars are biggest drivers to that. Thank you, sir.
Thank you, sir. Please feel free for any information you get. And we have one of the most exhaustive presentation always there on the website. But then you can even connect to the investor relations.
Thank you, sir. Thank you. Thank you, participants.